Hello everyone, welcome back to Unday Radar Talks. Dollar General shares fell 1.3% on Friday. This reflects that the selling force has obviously weakened a lot after the stock price plummeted 32%. But the question is why the stock price did not rebound. I think this may be because the short capital after the stock price plummeted has not yet been cleaned out, and the long capital that entered the market may not be able to fight back against the shorts. But I also saw some positive data, so I predict that the stock will rebound next. The data shows that the daily short-selling ratio of the stock was 11.8% on August 29th, and this ratio dropped to 8% on August 30th. The sharp drop in the short-selling ratio represents a decrease in bearish sentiment on the stock, which is a positive sign. In fact, from the perspective of trading volume, most of the trading volume of the stock in the past 2 days was concentrated below $89, and $86.70 was the peak part, which is a strong position for bulls, because this position is not far from the current price, and it is not difficult for bulls to turn it from a resistance position to a support position. I think it's just a matter of time because a lot of capital entered the market at the levels of $84 and $82.90, and these funds may be the bullish force that drives the stock price to rebound next. Let's take a look at the 15-minute chart of the stock. We can see that the stock has generated huge trading volume at the last minute of the last 2 trading days, which means that a lot of capital entered the market at $84 and $82.90. Although there may be some deviations in the position, it can still support such a conclusion. In this comparison, the selling force of the stock in the morning of August 29th does not seem to be so strong, and the bulls may have also adopted a segmented blockade against the bears, which seems to be reflected in the capital flow data of the stock. Let's take a look at the capital flow data of the stock. Let's focus on the data of the stock in the past 2 days. The net capital inflow of the stock on August 29th was as high as $203 million, which shows that the bulls may have tried the strategy of segmented blockade of the bears, but the stock price still fell, but we see that more capital has flowed into the market. The stock had a net capital inflow of $16.8 million on August 30th. Although the stock price fell, it seems that a large amount of capital has entered the market again, which is consistent with the previous analysis. Let's take a look at the market position distribution data of the stock. As mentioned earlier, I am currently bullish on the stock. In addition to the above data support, the position distribution data of the stock can also find some bullish signals. We can see that the stock is at $86.70 as the peak position, and the current price is only 4.3% away from this level, so it will be easy for bulls to break through this position. In addition, we also see that the stock has a relatively large number of positions at $82.90 and $84. These positions were completely generated on August 30th, and these positions may be part of the long capital, so the stock may rebound strongly next. For the target price, I think $86.70 is basically not a resistance position, because there may also be long capital entering this position. I think the stock price may fill the huge gap left by this plunge, so I set the target price at $104, but the stock price may not reach this level in the short term. Okay guys, this is my price prediction for Dollar General stock. Thank you for watching. If you like my analysis, please click the subscribe button and give a thumbs up. I will bring you more latest price predictions for popular stocks later. See you in the next video.